You are watching Market Watch, the brief overview of the key events from the world of finance. The current week turned out to be really full of important events, which was accompanied by a surge in trading activity in all sectors of the financial market. But yesterday we warned that the observed market reaction to the Fed's statement may be short-term. The reason is that several voting members of the U.S. Federal Reserve's Open Market Committee had previously expressed doubts about the willingness of the U.S. regulator to lower the key interest rate. And this week, the head of the Federal Reserve himself confirmed that there is no reason to ease monetary policy in the near future. But by the opening of the American trading session on Thursday, the yield of U.S. government bonds, with a maturity of 1 year, returned to the minimum of the current week. As a result, gold resumed growth, returning above $2,050 per ounce. At the same time, the demand above the technical resistance level of $2,060 was not sufficient for the development of a more powerful growth wave. If the current week ends below the marked barrier, then we can again see the formation of a wide sideways trend, indicating uncertainty. On the one hand, investors do not fully understand the Fed's willingness to keep the rate at the current level for a really long time. On the other hand, whether there will be a significant slowdown in the U.S. economy. While investors buying gold are assessing the likelihood of a recession in the United States, oil traders are trying to determine the ability of Israel and Hamas to come to a ceasefire agreement. After the information appeared that this deal had already been concluded, the quotes of the American grade of WTI oil fell below $74 per barrel. Real success in negotiations and the release of hostages can become a really strong bearish fundamental factor for the black gold market. At the same time, we should not forget about the still high growth rates of the U.S. economy and the relative stability of demand from China, which is a bullish factor. Continuing to discuss the increased volatility of most financial instruments, it is impossible to forget about the cryptocurrency market. Bitcoin tried to return below 42,000 again, but sellers failed to lock in under this psychological and at the same time technical support level. Nevertheless, before fixing the quotes of the largest cryptocurrency above the level of 44,500, we will talk about the formation of a very wide sideways movement in which Bitcoin can be held for several months. Recall that in order to form a long-term bullish trend, a significant inflow of capital into Bitcoin ETFs is needed. But this scenario is still the key one. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.